All right, good evening and welcome back to yet another session for the Elliott Wave Principle. Thank you, Mr. Ishwar Shuklaji. Thank you for joining in. We've got Matthew joining us as well, and Brother Arnold. How are you doing? Hope you're doing well. And for those who are joining us from YouTube Live, a warm welcome to all of you. And today's session is a theory session, but we are going to end up with doing some practical as well because we got to do the implementation on charts as well. So it's going to be theory plus practicals. Tomorrow we'll be doing a live session analysis for all the instruments in Hindi. So you might be willing to join there as well. So let's get started off. This is your host, Harsh, by the way, and these are your sessions. I'm just a facilitator. So please let me know if you have any doubt whatsoever. Today's session is only five topics we are going to discuss, and we have also been joined by Brother Mohammed. Welcome, Mohammed. Hi, thank you very much for making time in the month of Ramadan. Yeah, thank you very much, Matthew. And let's all get started with the theory portion. Before we start, let me read out the disclaimer. For those who are joining live on YouTube, once again a warm welcome. And if you do have any questions, please feel free to type in there. I do have a habit of toggling uh, in a few minutes here and there, and we will be able to answer your questions during the session or after that. All right. Today's session is motive waves. Remember, last session what we discussed was the basic structure of the wave principle, and I think okay, Isaac has joined us again. Welcome, Isaac, and welcome, Mr. Shailesh, as well. Shailesh, after a long time, brother, how are you doing? All well? Okay, so five topics we are going to discuss today. Basic structure is done last session. We are going to extend that basic session to, we are going to go deep into motive waves. It's not exactly so deep, it's a very vast subject, but I'm going to try and explain or discuss in a very simple manner four patterns. Motive waves are of two types. One is an impulse, the other one is a diagonal. And impulses are made up of extensions or truncations. Diagonals are made up of either leading diagonals or ending diagonals. All right, so today's discussion is very simple. Only four patterns we need to understand. And remember, I told you there are only 13 patterns. I repeat, sir, there are only 13 patterns and they are identifiable and they repeat over and over and over again. If we are good at identifying these patterns, we are better than any trader when it comes to placing or playing around. All right. So let's go through the disclaimer first. Over the counter margin derivative contracts, including contracts for difference, that is CFDs, and spot foreign exchange are complex instruments and they come with a high risk of losing money rapidly due to the amount of leverage offered. I'm sure that you are aware about how to use your leverage. It's a double-edged sword, so kindly be careful. You should consider whether you understand how these products work and whether you can afford to take that risk. And independent professional advice is highly recommended before any kind of investment or trading. And this webinar serves an educational purpose, will not include any financial recommendation or advice whatsoever. Thank you. All right, so let's get started with the first discussion, and that is impulse. Welcome, Karthik. So the impulse wave is right flashing, it's flashing right on your screens right now. It is the most easiest and most simplest pattern to identify among the motive waves. Now, for those who have joined the last session, we all know there are two types of structures that the market follows. I will quickly revise. The first structure is called motive waves. It is named motive because it moves with a motive, it moves with a definite purpose, it moves with a definite price targets in mind. And the second structure is corrective waves. Corrective waves are opposite to the motive wave. They are corrective waves are just like the the police or income tax department or customs department or any other tax department who would want to check our move, whether we are moving in the right direction, but they want to put a check on our move. All right, so we've got motive and then we've got corrective. Corrective waves have got no purpose. They don't have any definite purpose. Their only purpose is to check the motive wave. All right. The second thing that we need to specifically remember, and it's the easiest way to remember, is that motive, welcome Mr. Taha, motive is 5 waves and corrective is 3 waves. I repeat, sir, motive is 5 waves, corrective is 3 waves. Motive is labeled as 1, 2, 3, 4, and 5, and correctives are always labeled alphabets. It is either A, B, C, or it is A, B, C, D, E. Now, we are going to discuss the corrective waves in the next session, that is next Tuesday. Today's session is for motive waves. All right. So, simply, I think it is simplified and understood clearly. There are two structures, motive and corrective. Motive are 5 waves, correctives are 3 waves or 5 waves. Motives are always labeled 1, 2, 3, 4, 5. Correctives are always labeled ABC or ABCDE. Welcome, Abrar. Thank you very much for joining. Let's continue. Okay, so that's the impulse structure on your screens right now. It's the part of it's the first and it's the most easiest part of the motive wave to identify and also to trade. Big amount of profits can be made if you can identify motive waves properly, specifically the third wave. All right. Now I'm going to give you example of what the third wave looks like. It is all there in Euro USD, GBP USD, and the dollar index right now. So this is impulse wave 1, wave 2, wave 3. It's normally the fastest and the largest wave among all 5 waves, among 1, 3, and 5. And then you have wave 4 and wave 5. Now there are specific properties, specific rules that you need to remember, please. I will revise this. We did it in the last session as well. Today is a revision of that, let's say. First rule, please remember, wave 2 cannot retrace more than 100% of wave 1. I repeat, sir, wave 2 cannot retrace more than 100% of wave 1. In simple terms, wave 2 cannot go below the low of wave 1. If the low of wave 1 is, let's say, 100, wave 2 can never be 99. If it goes to 99, and if you are labeling wave 2 there, then we are incorrect. All other things are going to be incorrect. Something else is happening. We have to check what pattern is occurring. All right. And I repeatedly tell you there are only 13 patterns. I don't know how much time it's going to take to remember those 13 patterns, but there are specifically only 13 patterns. And this is the first one of them. Okay, wave 3 cannot be the shortest of 1, 3, and 5. I repeat, sir, Wave 3 can never be the shortest of 1, 3, and 5. Most possibly, most predominantly, 95% of the time that I've seen, wave 3 is the largest, is the single largest wave among 1, 3, and 5, and is the fastest wave among 1, 3, and 5. So, big amount of money is always made there. Rule number 3, very important for impulse wave, because that will decide your stop loss as well. You can place your stop loss in a very smart way. Wave 4 will never enter the territory of wave 1. I repeat, sir, wave 4 will never enter the territory of wave 1. So, while trading an impulse wave, if you are planning to buy at wave 4, which you should be, and we are all waiting to buy wave 4 in euro, pound, and we are waiting to sell wave 4 in dollar index, yes, you can place your stop loss 1 point below wave 1, just 1 point below wave 1. Because if this is wave 4, it will never go there. All right, so there is no need to put your stop loss below wave 2. Most traders do that, but that is more risk actually. The risk is reduced if you know this knowledge properly. All right. Rule number 4, 1, 3, and 5 are motive, that is, 1, 3, and 5 are subdivided into 5 waves. If you put a microscope or a magnifying glass on wave 1, 3, and 5, we will see 5 waves in between. We will see 5 waves in between, subdivided by 5 waves. All right. So these are the 4 important rules that one must remember. Another rule is wave 3 always terminates above wave 1, and that's a very simple rule. It's not a rule actually, but just remember wave 3 will always terminate above wave 1. It goes without saying though. So 5 points to remember. 1, 3, and 5 are motive. That means they are subdivided into 5 waves. 2 and 4 are corrective. That means they are subdivided into 3 waves or 5 waves. Rule number 2, wave 2 never goes below the beginning of wave 1. Rule number 3, wave 3 can never be the shortest. This rule is very important for trading and also for labeling. All right. Let's say wave 1 is 100 points. Wave 3 is 95 points. Remember, wave 1 is 100, wave 3 is 95. If this is going to be an impulse, you can place your stop of wave 5, because wave 5 can never go above 95. Because if it goes above 95, then wave 3 will become the shortest wave, which is not allowed. So if you want to trade that wave 5, you can place your stop loss just at 94 and go short. It helps that way. All right. So these are the 5 rules that we need to remember. And if you remember these 5 rules and apply those in labeling, don't fear to label wave 3 specifically. Wave 3 subdivides into 5 waves clearly. All right. These are the rules again. Wave 2 cannot retrace more than 100% of wave 1. Wave 3 always terminates above wave 1. That goes without saying. These 3 are very important to remember. Wave 3 cannot be the smallest among 1, 3, and 5. 1, 3, and 5 are motive, that is, they are divided or subdivided into 5 waves. 2 and 4 are corrective, they are subdivided into 3 waves or 5 waves. Wave 4 never ever enters the territory of wave 1. All right. Okay, let's move on. I hope that this is very clear now. If you do have any question or doubt, please do let me know. This is one of the most important theory sessions that we are doing, the next two, today and the next one. Just a small announcement, we'll be extending these sessions for another 10 weeks. So it is not going to end on 18th of May. It will be ending another 10 sessions after that. It will be mostly practical. Extended wave. Okay, extended wave, I want to show you first the picture because that goes easily in mind. Yes, sir. Just a moment. Okay, let's look into the charts right away. I was going to take it after the theory, but it's okay. We can do it right away because unless we see this on charts, it is not going to help us. All right. I'm trying to expand or I'm trying to make the view larger so that you can view it clearly. I'm zooming in till the time it is very clear. I think this view is very clear now. Okay, we need to see this portion, sir. Right from 28 September 2022. No problems, Ishwar sir. This is anyways theory. I will send you the recorded version through email. Don't worry, sir. Please take care of your health. Thank you. Okay, so this, please watch this chart from, I'm going to show two theory sessions, okay, in the same wave. There are two theories here. One is the impulse structure, and the other one is an extension. Now let me label this. Please give me a minute because I need to change the degree. Corrective waves we will discuss in the next session, but I will tell you what the corrective waves are here. We will do the theory of the corrective waves in the next session, please. Okay, this is the first wave, impulse. That is wave 2, corrective wave. Now this wave 2, the, the shape of this wave 2 is an expanded flat. Expanded flat theory we will discuss next time, but just remember expanded flat go above, they go to a new high and then drop back. It is not even an expanded flat, it is a running flat, but it is an ABC. It is labeled as ABC. So I'm going to do this labeling here. A, B, and C. All right, and this structure is going to be minute. All right, so 1, 2, which is ABC. Then the third wave is extended. This is an extension. Why is it an extension? Because you see the third wave is subdivided into 5 waves. You see 1, 2, 3, 4, and 1, 2, 3, 4, and 5. You see there? 1, 2, 3, 4, and then is anyone finding difficulty in the connection, please? If you are finding any difficulty in the connection, please let me know. I see connections being dropped and then again back. If you are finding any difficulty in the connection, please do let me know. I'll get it checked. I always keep saying that because it's a habit of mine to check if the connections are dropping. All right. Thank you, sir. So this third wave is extended. You see, wave 1, 2, 3, 4, and then 1, 2, 3, 4, 5. You see that? This is called an extension. And in this extension, the first wave is extended, We've got a message. Okay, no problems, no problem. If that is the case, then there is no problems. Thank you, Mohammed Ji. And then we have a triangle structure, wave 4. A, B, C, D, and E. This we are going to do it next time. But this is a typical triangle structure, which is a corrective wave. And finally, we've got the fifth wave, which is again subdivided into 5 waves. So wave 1, wave 3, and wave 5, they subdivide into 5 waves on the screen. Wave 2, A, B, C, and wave 4, A, B, C, D, E. Those two are the corrective waves. All right. And the current theory that which we are doing is called extension. Now, this is a classic extended wave, all right? And there is a small version of this classic extension which is going on right now. So I'm going to do that as well. But I'm going to flip the chart to 1 hour. We are going to see these patterns appear on all time frames, not only daily. It will be appearing on an hourly chart. It will be appearing on 4 hourly chart. It will be appearing on 5 minutes chart or 10 minutes chart. It is up to you. If you are able to see that, you will be able to see that. As simple as that. Now sit tight and pay attention because this is a classic example of what an extension looks like. Actually, this is an impulse wave, but the impulse wave is still not complete. We've got the first wave, the second wave, and the third wave is going to go somewhere higher, 3, 4, and 5. I'm not labeling it right now. And the degree, okay, let's not change the degree right now. And then you see this third wave extension, okay? Let's understand what is an extension. So here we have the first wave and the second wave, and this is the third wave. And somewhere there's going to be 4 and 5. But now I'm going to change the degree here. I'm going to change it to a smaller degree. Remember, degrees are nothing else but a hierarchy. It is like grandfather, then father, then son, right? And then a grandson. It goes like this. Let's change it to minute as well. That things are very clear. All right, now what is a third wave extension? This is a classic example of what the third wave extension looks like. I'm going to push all these on the right hand side. I'm going to just pick up wave 4 somewhere here. All these are going to go there. Now, please pay attention to this wave. Can you identify that the third of third wave is extended here? See, I will take a pointer and run because I'm not labeling here. I don't want you to get confused, but look at this wave structure. 1, 2, 3, 1 of 3, 4 and 5. Sorry, 1, 2, 3, 4, and 5. Okay, that's the first wave. Then you see that sharp second wave, and that subdivides into 5 waves. 1, 2, 3. Okay, this is the third wave. Sorry, 1, 2, 3, 4, and 5. It ends here. This entire rally is the third wave. You can you see that 5 waves subdivided here? This is exactly what I've shown in the theory here. The third wave is extending 1, 2, 3, 4, 5. It's exactly somewhere something like this. One, two. I think the third wave is also extending. Three, four, and five. It ends. It starts from here. It ends right there. Then you have wave four, and then you have wave five. So this becomes one, two, and three, like what I've shown in the chart. One, two, and three over here, and that one, two, and three, one, two, and three becomes four and five. But exactly is one, two, and three, four, and five. That becomes bracket three. In this case, it becomes bracket three in Romans. Now, this is just a classic example of how the third wave extends. Now, if we can identify this wave as an extension, then we can catch the maximum profits, right? And how to identify an extension? Never fear to label an extension. Third waves are labeled like this. You start with wave one, you start with wave one and then wave two, and then start again. Wave one, wave two, wave three, wave four, and wave five. So that is an extension. This is how you catch an extension. Then again wave four and then wave five. So what we are seeing on the chart right now is Roman 1, Roman 2, Roman 3 complete. Potentially complete. There's another way to find out how it is complete. It is through Fibonacci. Elliott Fibonacci is slightly different. You've got to give three clicks. The first is the beginning of the wave. The second is the termination of wave 1. And the third click comes to the termination of wave 2. And the 161.8% is the target. You see the target is also being met. So most probably uh, we've got wave 1, wave 2, wave 3 complete. Now ideally we should see some kind of a wave 4 now. All right. Now wave 2 was an expanded flat, so wave 4 will be a sharper one. And how to find out wave 4, sir? Very simple. Just take a Fibonacci retracement of wave 3. It will terminate at a 38.2%. Most probably it should drop towards 1.07 handle. All right. Now, this is a classic example of extension on an hourly chart. Just a while back, we saw the same third wave extension on a daily chart. There you are. Can you see the pattern identifying? It is identical. Can you see? That's what I said right now. Like grandfather, like son, right? Sorry, like grandfather, like father, like son, like grandson. Can you see identical patterns being unfolded here? Okay, let me mark that so that you can view it properly. Just view this portion. That's a huge magnitude. The only difference is this guy is small in magnitude. Can you see this identical patterns? This is what is to be identified, and if you can do that, it becomes very simple. It becomes a child's play. All right. So if you have any questions, please let me know, or I'll go back to the theory. We've done impulse and we've done extension, and there is a last portion that is an extension, and there is a last portion which is called truncation. I don't know if I have mentioned this in theory. Let me see. Yeah, truncation. Now, truncation waves normally don't appear very frequently, all right? But theoretically, we should know what is a truncation. Truncation is, as the name suggests, it normally appears at the fifth wave, Okay, truncation normally appears at the fifth wave, and it falls short at times. That means the fifth wave falls short of printing a new high above wave 3 extreme, but it is still subdivided into 5 waves. So if you count wave 5, it will still be subdivided into 5 waves, but there will not be an extreme high. It looks like this. Everything else will remain the same, sir. Wave 1, wave 2, wave 3, everything will be the same. The only change will be wave 5 will fail to produce a new high above the third wave. So but it will still be subdivided into 5 waves. You've got to remember this, otherwise you'll make a mistake. This guy should be subdivided into 5 waves. If you count if you count the waves, it will be 5 waves. All right. So that's the difference. That's the way how you identify. Let me try and erase this. All right. So, but truncations are not really very rare. They are very rare occurrences. But I don't see any truncated wave right now on the practical. But everything remains the same, except for if I show you on the chart, this wave five. All right. This wave five, which I have shown here, it's a thrust wave. It goes and prints above the third wave. With this wave 5, it falls short. Above, it doesn't go above wave 3. Normally, like not this one, because that's an expanded triangle. When there is an expanded triangle, it you cannot measure the third wave high accurately, because the expanded triangle comes in between. That's not an actual high, it's an expanded triangle high. But theoretically, I hope that you have understood a truncation means a wave 5 falls short. All right, that's the only difference. Okay, let's move on to another interesting two patterns now. Ending diagonal. This is one of the most interesting patterns, ending diagonal. First of all, the name itself, it suggests ending. What is the ending diagonal means? It's something is coming to an end, okay? So what can come to an end? It's either a correction or a trend, correct? Either a trend is coming to an end or a corrective wave is coming to an end. So how to identify? Normally ending diagonals appear when it is trending, when the market is trending, that is when the market is in the motive wave, uh, ending diagonal will appear as the fifth wave, okay, of an impulse. And when the markets are correcting, ending diagonals appear as a wave C of a corrective wave. And that indicates exhaustion of a trend. Now, wave C of the corrective wave we will see later on next session. But right now, you need to understand that this is a fifth wave pattern. Normally, it appears the fifth wave. Now, there is a slight difference between the sub waves of an ending diagonal. Normally, wave 5 sub is a motive structure, correct? It's a motive structure labeled 1, 2, 3, 4, 5. And and we all know that a motive means 1 is 5 waves, 2 is 3 waves, 3 is 5 waves, 4 is 3 waves, and 5 is 5 waves. But in case of ending diagonal, it is 3, 3, 3, 3, 3. That means wave 1 is also 3 waves, wave 3 is also 3 waves, and wave 5 is also 3 waves. So this is one different rule which you need to remember. And the second rule which you need to remember is wave 4 always enters the territory of wave 1. I repeat, sir, wave 4 almost certainly enters the territory of wave 1. So let me show it in the diagram and then we will find out, because on the charts we have not seen any ending diagonal appear lately, but we'll try and find out. So let's say this is wave 4 and that is wave 5 into brackets, okay? So between wave 4 bracket and wave 5 bracket, an ending diagonal will appear like this: 1, 2, 3, 4, and 5. Now the only difference is wave 1 will be subdividing into 3 waves. Wave 2 already 3 waves. It is already 3 waves. Wave 3 will subdivide into 3 waves again. Wave 4 is again 3 waves already. And wave 5 also subdivides into 3 waves. And if you connect wave 1 and 3 and 2 and 4, it will be like a cone. Mostly it will be like a cone shape, a contracting. All right. So please remember, ending diagonals are the last waves. This is one of the best way to identify. If you can identify an ending diagonal, then you can place yourself beautifully when the fifth wave is ending. Just go sell here when now this portion most of the time it throws the price throws above the line. It is called what is it called, throw over. Sorry, this is called throw over. So most of the time it throws over, but not necessary though. It's not a rule, it's just a guideline. So when the price is throwing over, you can go and enter, you can go and sell that. This is a very aggressive strategy, but you know what? If you can catch this bus, the next drop is going to be all the way towards that wave 4, and after that wave 4, it is going to go all the way towards that wave 4, the beginning of the diagonal pattern. It is so powerful. It reflects as a most powerful pattern. Prices drop like a rocket. It doesn't go like a rocket, it drops like a rocket. Okay, let me try and see if we can find out a diagonal structure. Ending diagonal. I don't know if you can I don't know if you can see this clearly. Let me try and remove this. It is here somewhere here. This portion. Just a moment, I'm adjusting the chart view properly. It looks like this. It's not an ideal one, but it looks like this. A cone structure where you got wave one. Oh, that's a labeling. It's a wave one, wave two, wave three, 4, and 5. That is a potential ending diagonal. And once the ending diagonal is complete, it reverses so sharply. First it takes off wave 4 and then It goes all the way to the beginning of the diagonal structure. You see the price is rallying so swiftly back towards the beginning of the diagonal structure. Right? I think there is one more I've seen in whether it is a dollar index or not. Let me find out. There you are. I need to take a clean chart first. Wave 3 is not exactly what it should be like. But tell you what, I think this is an example of an ending diagonal. Not exactly an ending diagonal. I'm sorry. I don't think it's an ending diagonal. But ending diagonals are very powerful cone-like structures formed 5 waves, and each wave subdivides into 3 waves. I'm not able to find out right now, but sometimes in the practical sessions we will be. I'll find out in advance uh, when we do so. All right. And there is another pattern which is called a leading diagonal. Now, leading diagonal, first I will show it to you in the theory, and then I'll come back on the practical. But leading diagonal is just happened. It has just happened on the either I think it is between the 3rd of February. But I'll show it to you on the theory portion first. We just did the practical as well right now. And I'm going to pick up a cleaner chart. There you are. Okay, but leading diagonal, how it looks like, first let's look at the theory. All right, once it is, the ending diagonal is the last wave, occurs in the fifth wave or wave C of a correction. Leading diagonal is opposite. It is found as the first wave of an impulse or wave A of a corrective wave. All right, so this is the first difference. It's the first wave. Indicates the beginning of a trend, and it is a 5 wave structure and similar to the motive wave 135. That it's a 53535 structure, so no other rule changes. Only one rule: wave 4 always enters the territory of wave 1. So the structure looks like this: wave 1, wave 2, wave 3, wave 4 drops into wave 1 always. It has to drop. In an impulse it cannot drop, but in a diagonal it will always drop. All right, that's the only structure. Otherwise, it is a 53535, all same, and it's a 5 wave structure labeled as 1, 2, 3, 4, 5. All right, let's identify this. Now I'm not labeling, but I'm just moving the wave here. That is wave 1, wave 2, wave 3, wave 4, and there goes the fifth wave. Again, wave 1, wave 2, wave 3, wave 4 entering the territory of wave 1. Third wave is the longest, sir, but it's not the shortest. Matthew, the rule says the third wave cannot be the shortest, my friend. So even if it's not the shortest, if it's the second largest, it will be okay. But the rule says it cannot be the shortest. So I think here it's not the shortest one. And the one we identified in the dollar index, that was not the correct one. Yes, yes, yes. The previous image It was not the correct one. I told you it's not the correct one. In the daily chart, it's an incorrect one. That's why I removed the pattern. It was not the correct one. I corrected myself and removed the pattern, the ending diagonal one. But the leading diagonal is like this, exactly 1, 2, 3, 4, and 5. And this is the beginning of a trend where the fourth wave invariably enters the territory of wave 1. Over here, you can see wave 4 terminates right below the wave 1. So this is how you identify leading diagonal, and then you connect 1 and 3 and 2 and 4. Now you see here there is no throw over. So it is not a rule that it should always throw over or throw under. It's not a rule. If it does, it is good. If it doesn't, it is okay. Many times when you are watching a leading diagonal or an ending diagonal, wave 5 within the diagonal is a truncation. Now you know what is a truncation. Wave 5 can fall short of wave 3 highs. It could be a truncation. So it's allowed. Please allow even if it's a truncation. The only thing we need to do is whether it is subdividing into 5 waves or not. This is a 90. This is I can, because I have traded this right now uh, in the Euro USD, and the second one is in the dollar index. Sometimes it becomes difficult to identify patterns, but specifically when they have occurred recently, you see this is a leading diagonal again. This is a leading diagonal again. Wave see wave 1, wave 2, 3. I think it's I've done some mistake again. Let me check it again. It starts from here. Wave 1, wave 2, wave 3, wave 4, and 5. This has missed or hardly touched the sequence. Normally it goes a slightly deeper. This has just touched in the dollar index, but that's allowed. This pattern is also a leading diagonal. And when you see a leading diagonal, you be prepared for a corrective wave, that is wave 2, and then see boom, wave 3. Normally the wave 3 is the largest and the fastest wave, but theoretically it has to be not the smallest wave. That's it. But most of the time it's the largest and the fastest wave. So I specifically remember these brothers because we traded. We in our live sessions also we gave the sell call here, and it's still wave 3 going on. All right. So those are the 5 powerful patterns. Uh, Motive has got 2 types: impulse, extension, and truncation. 3 types actually: impulse, extension, and truncation. And then diagonals, again 2 types: ending diagonal and the leading diagonal. Okay. And when we come back next time, we will discuss the corrective waves. The corrective waves are very tricky, so it's going to take some time. Maybe it's going to be 60 minutes or so. But zigzags and flats are very okay, but when it comes to triangles, still okay. But when it comes to combinations, it's very tricky. It's very tricky out there. And tell you what, corrective waves are very difficult. Any trader can go baffled, including the best of the traders, because corrective waves do not really reveal themselves unless they want to. All right. So it's very difficult to identify corrective waves. That's the best phase when you can rest as a trader. All right. So this brings us to a pause to today's session. If you do have anything else to be asked, kindly let me know. Yes, Matthias, this session is being recorded, and you will find it in the YouTube channel as well. Let me send you the link here. We've got a question from the YouTube chat. There is a playlist, YouTube playlist. You can find the recording there. All right, Matthias, if you are here, I've just pasted the link, and we can bring today's session to a pause now. You can also write an email at most participants joining in Zoom, they all know the email address. But if you are joining from YouTube Live, harsh.jappy, harsh.japee at the rate gtcfx.com is the email. You might want to send in your questions or any other requests or feedbacks over there. And let's bring today's session to a pause here. Once again, thank you everyone, including the Zoom sessions and the YouTube. Thank you, Matthew. Thank you, Brother Arnold. Thank you, Mr. Shailesh. Yeah, thank you, Anand, for your kind words. It is all because of you guys that these sessions are going actually, because otherwise they are no value. Thanks again, Matthew, Arnold, Karthik, Shukla ji, Shailesh ji. Thank you again for joining. Isaac, brother Isaac, thank you so much. Mohammed Taha, thank you very much for joining again. Thank you, Matthew. Thank you. And please keep asking questions. It keeps me also the check. The link for the recorded session here also. Okay, just a moment, Isaac. Please keep checking this playlist, everyone. And if you don't find anything there, you can write an email to me here. I will send you the individual link of the video. harsh.jappy at the gtcfx.com. Thank you for your valuable questions. Thank you for your valuable presence. And one more thing, sir, there is. Have you been able to register all the 4 webinars over here? If not, there is a web page. We have got a landing page where all the webinars are available. You can register there as well. Right now, I am pasting the registration links directly, but I think everyone in Zoom is registered already. Yes, yes. Thank you, Isaac. I think everyone in Zoom have already registered. But next time I will also bring the I don't have the link right now handy with me, but I will get the landing page as well for those who are joining from Zoom. All right. Thank you, Mansoor. Thank you for your presence. Goodbye. All right, everyone in Zoom as well. Thank you for your presence. Thank you for your time. Thank you for your questions. And thank you for your patience. We'll see you for English live session on Friday now. And for Hindi sessions, that is tomorrow is live in Hindi, and day after is a theory in Hindi. Live sessions normally does not have any language barrier, so all of us are welcome. Only in the Hindi theories, maybe if you are not following Hindi, it's okay if you skip. But your presence is really valuable, and thank you once again. God bless us all. Take care and God bless. Goodbye. Goodbye, Brother Arnold and Brother Isaac. I'm now closing the session for the day.